Hello, I'm Nisha Pillay, and I'm here to discuss the World Payments Report 2010, which has just been published. And joining me from the European Central Bank is Wiebe Ruttenberg, Head of Market Integration, from Capgemini, Managing Director Bertrand Lavessier, and from the Royal Bank of Scotland, Chief Executive of Global Transaction Services, Brian Stevenson. Welcome.
Thank you.
So Bertrand, I'd like to start with you. Can you tell us a little bit about the report? What are the highlights?
On the volume, in a nutshell, it's a growing market. Payments is being resilient across the crisis, and specifically thanks to two things. One, cards on one side, and on the other side, the emerging markets. On the regulation, we are at a tipping point where we are seeing some acceleration thanks to the SEPA implementation in Europe, and specifically on the discussion on the end date. There are other regulations that are slowly changing also the payments environment, which is linked to the Basel III anti-money laundering and the other regulations that frame this market. And on the third topic, on the spotlight itself, there is a discussion about what banks should be doing in terms of thinking ahead of their payment strategy and what they should be engineering in terms of changing their business model on the revenue side, on the cost side, and therefore discussions on how they should get into a discussion on the outsourcing, insourcing. So that's in a nutshell what's in the report.
The data in the report shows that the payments market has been pretty robust, even in the face of rocky economic times. Brian, why is that?
Fundamentally, the payments business is not volatile. Unlike other parts of the banking landscape that we've seen during the crisis, it is a basic piece of banking. Moving money from A to B is fundamental to what happens in the world's economy. And I think it's proved the test of time. It's been stress tested during the crisis and has been proven to be resilient to those changes. Clearly, in the report, you will see differences between growth rates in developed and developing economies, and that's a reflection of GDP. But I think even in the developed markets, the revenue growth and the growth of this business from a volume perspective has just about outpaced GDP growth, even those depressed markets. And I think that's a testament to the fact that this is a basic need part of the banking landscape that's resilient.
So robust market, resilient market, but there are changes up ahead, including regulation. There's been a lot of talk about SEPA here at the Sibos conference. We still don't have an end date, Wiebe Ruttenberg, for SEPA migration. How frustrating is that for you?
You need to be an optimist in this business, so to say, and it's of course a little bit disappointing there's no end date set yet. But I think it's good to mention that we also have just published our 7th progress report on SEPA, and there the Eurosystem, the ECB, makes a very clear point about setting an end date. First, the need for regulating an end date, need for regulatory action, but also that for credit transfer, end of 2012 is the appropriate date in the view of the Eurosystem, and end 2013 for direct debit. So by mentioning these 2 dates in our progress report approved by the Governing Council of the ECB, we hope to set a benchmark and to trigger the debate also in the regulatory institutions. And we hope that soon result will be there, that a draft regulation will be issued with these dates in it. Of course, in the end, it's a result of a co-decision procedure, a democratic process with the European Council of Ministers and of course the European Parliament.
SEPA isn't the only big regulatory change on the landscape. Basel III, for instance, is going to increase capital requirements. And what kind of knock-on effect is that likely to have in the payments business, Brian?
So overall, we agree that the banks need more capital, and that's a logical and sensible reaction to the crisis that we've been through in the world in the last couple of years. So fundamentally, we agree with the principle of more capital in the banking system protecting against risk. Of course, there are 2 potential areas within Basel III where this may have an impact on the transaction banking business specifically. And that's not to say the regulators aren't listening to those concerns, but they principally relate to the liquidity allowance in their financial institutions business and the value of operational balances that the banks hold and how much liquidity allowance that's given to the banks in their liquidity ratios. So that's an area of concern. I think the regulators, as I say, are listening to those areas of concern and making a distinction between what you might call fast flow money versus operational money that's likely to remain sticky in that bank's balance sheet. The second area, which we've drawn attention to, and again I think the regulators are interested in listening to that concern, is the credit conversion factor associated with trade finance, which is 100%, which we think is a rather high credit conversion factor given the history of losses and performance of trade finance as an instrument in the world's economy. So as a principle, we think it probably should be lower than that. But we also want to make sure that the imposition of that ratio does not hold back the development of world trade, because that's clearly an important issue for the growth and development of the world's economy as we move out of the crisis.
Absolutely. So when you look at the payments landscape, what are the emerging trends in the market in terms of partnerships, in terms of sourcing strategies? Bertrand?
I think the payment landscape is it's contradiction between stable and changing fast. You know, it's stable because, as Brian's saying, it's a very sort of, there are a number of transactions and it's growing. Now, at the same time, it's changing fast because of the implementation of regulation and also the impact of some players have seen on their P&Ls and about the impact the changes are going to be seen in their day-to-day activities. So they need to move. And moving is also about reacting to some of the competitive movement of new entrants that are focusing on some areas, that are expanding the field from the traditional payments to going to other source type of payments like P2P payments or B2C payments or with new instruments. And they need to react to this. And on the same side, that's on the revenue side, but on the cost side, we also have to think a different way of operating, because as the revenue are reduced and some have now a better understanding of their overall cost, as it was compared to what it was before, they are changing the infrastructure.
Wiebe, from a regulator's point of view, how do you see the payments landscape, the key trends emerging?
Now, the key trends, I think, of course, is that we are heading towards an integrated, harmonized European retail payments landscape, in a way that we will have one credit transfer, one direct debit. We have the same standards across Europe for card transactions, these kind of things. That will happen in the upcoming years, and I think really that also needs to brought forward. And once we have these harmonized basic products and services in place, of course, all about what about the next steps? What about innovation? What about innovative payments? And there, I think it's important to see what decisions banks will make. Whether they will be the service providers will offer these innovative payment services to their customers, or will other players step in? Non-banks, payment institutions, and so on, mobile telco providers. So I don't have the answer on that, and I think our task also as ECB Eurosystem is to make the market aware that these kind of choices are out there, and then of course it's up to the free market to decide what way to go.
Brian, as one of the heavyweights in the global payment system, where do you see it going?
Well, I think we've necessarily talked a lot about Europe because we're in Amsterdam and that's the focus of the report, but I think it's also worth mentioning the trends that we see outside of Europe, which is in general relatively low growth in developed markets and much higher growth in emerging markets. So as a participant in the world's economy and as in the payments market, clearly the opportunities for growth in absolute terms exist much more in emerging markets than they do in the developed markets. So that's, I think, a key lesson from the report. It's a natural thing because that's where much of the recovery in the world's economy is taking place. That's where exports and imports and trade finance is also recovering. So it's a natural consequence, but it's an also important trend that's brought out in the report.
If you'd like to get hold of a copy of the World Payments Report, you can get it online at www.wpr10.com. Thank you for joining us.